Welcome back to the stock market roller coaster. The S&P 500 closed down on May 23, 2025, at 5802.82, a dip of 0.67%. The Dow Jones also fell, dropping 256 points. The main culprit? Renewed trade war fears. President Trump threatened a 50% tariff on EU goods starting June 1, 2025, and a 25% levy on non-US made iPhones. This isn't just noise, it's a market-shaking declaration. The S&P 500 was on track for a weekly pullback of over 2%. Concerns about the US deficit spiked bond yields, unsettling equity investors. Mitchell Goldberg noted the tariff roller coaster makes investors wary of buying dips. Some, like Scott Ladner, think the market might not panic over EU tariff threats, assuming Trump might cave. However, Trump's tough EU stance could mean prolonged negotiations. Stay alert. These are big league moves with real consequences for your portfolio. Let's talk about the titans of industry and tech facing trials. OpenAI is reportedly acquiring an AI device startup co-founded by Jony Ive for $6.5 billion. A massive bet on AI hardware. Tesla's vehicle deliveries are down by 50,000 units year-to-date, raising questions about demand and production. Reddit's stock tumbled 5% over concerns Google's AI mode could divert traffic. Nvidia, the AI chip champion, reports earnings on May 28. Investors hope for strong results to boost the tech sector. Nvidia's stock rallied 20% in May despite being down for 2025 overall. All eyes are on Nvidia. Don't disappoint. Let's zoom out to the global economic landscape. China slapped anti-dumping tariffs up to 75% on plastic imports from the US, EU, Japan, and Taiwan, signaling fragmented global trade. In the Middle East, oil prices stabilized with talks of OPEC, plus increasing output. US crude inventories are rising, impacting energy company profitability. The European Central Bank might cut interest rates below 2% due to global trade tensions. Europe's export-heavy economies like Germany feel the pinch if global trade slows. Economic data from Europe this week will provide more clues. France releases preliminary inflation data for May. Germany reports GfK consumer confidence for June and unemployment for May. The Eurozone will report economic sentiment and ECB consumer inflation expectations. Italy releases preliminary inflation data. Interest rate decisions from New Zealand and South Korea are expected. It's a global symphony of economic indicators. Every note matters. Trade war drums. The tariff beat intensifies. Trump's 50% tariff threat on EU imports is a potential economic earthquake. The EU is the U.S. largest trading partner by imports. Apple's potential 25% levy on non-US made iPhones adds to the tension. This uncertainty is poison for business planning and investment. Investors are hesitant to buy dips amid trade war fears. Scott Ladner suggests the market might assume Trump will negotiate, but prolonged negotiations are possible. A full-blown trade war could lead to higher inflation, lower growth, and a potential recession. Data deluge. Key numbers to watch this week. Monday, May 26th, is Memorial Day. The NYSE will be closed. Tuesday, May 27th, brings durable goods orders for April, FHFA home price index, and consumer confidence numbers for May. The Dallas Fed Manufacturing Index for May and AutoZone earnings are also on Tuesday. Wednesday, May 28th features the Richmond Fed Index and FOMC minutes. Investors will scrutinize the Fed's thinking on inflation and interest rates. Earnings from HP, Synopsys, Agilent, and Salesforce are due. Thursday, May 29th includes continuing jobless claims, Q1 GDP estimate, and pending home sales for April. Earnings to watch: Costco, Ulta Beauty, Dell Technologies, NetApp, and Hormel Foods. Friday brings the core PCE deflator, the Fed's preferred inflation gauge. Cramer's Corner, a bold look at uranium, not investment advice. Uranium is gaining attention as nuclear power sees a renaissance. Energy Fuels increased its 2025 uranium production guidance by 22%. They've also boosted their finished goods inventory guidance by 193%. Investing in commodities is risky, but uranium's long-term fundamentals are intriguing. Nuclear power offers a reliable, carbon-free alternative as countries decarbonize. New reactors are being planned and built, providing a tailwind for uranium prices. The energy transition is a multi-decade theme, Uranium is critical. Do your own homework. This isn't a buy recommendation. Stay diversified, stay informed, and never stop learning.